this is significant. ECB going more the way of the Banque de France or the Bank of Italy prior to the formation of the euro. They're going to be more profligate. They're going to be more like a Banana Republic central bank, I would say. Friday, July 9th, 2021, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at whether we're going to get stagflation or hyper stagflation. I think the two are a certainty. Yes, there's still many who believe we're going to get deflation, but I think we might get deflation after a collapse, because as I've said before, deflation is the collapse of the money supply. It's the collapse of credit. Yeah, that might happen after the crack-up boom, after a stagflation. Crack-up boom, of course, is a hyperinflation or loss of confidence in the currency. Today, I'm going to focus a little more on stagflation because I think we're already in a stagflation. We're seeing economic numbers, not only from the US, but from the UK and from Europe, pointing to a very lukewarm recovery. You would expect with the economies opening up a bit more that we'd have a big recovery. But I think the powers that be have scared people a lot. People don't want to go back to work. They enjoy being at home and getting paid by the government, stimulus checks. They enjoy the furlough. They enjoy the time at home with family, with their pets. They enjoy doing things at home, like fixing things, gardening. And the other thing I would say is that, especially here in the UK, the way they've managed, the government has managed, the way out of lockdown has been really bad. It's been really stop and go. And businesses are very uncertain about the future, especially small businesses that are not resource rich or have access to the easy credit that the big corporations near the globalists have. So yeah, I think we're definitely getting stagflation. I like to also tell you that I've got someone coming up on the channel. I'm going to interview him probably in the next week or so about hyperinflation. This guy is actually survived hyperinflation in Romania. And thanks to you and also my wife, she pointed me out to him. It's a Star Path Academy. Many of you probably have heard of him. I contacted him. I've listened to a lot of his videos. I think they're great. And I want him to come on and talk about his experiences in Romania in the 1990s. I hadn't realized that there's such bad inflation and even hyperinflation in Eastern Europe during that time. It's almost like talking to someone back in 1923 Germany directly. So I think he will help us a lot understand what hyperinflation is all about and what we need to do to protect ourselves, our families. And yeah, that seems to be the most important thing in a hyperinflation. Of course, having a financial wherewithal will also help, but there's a lot of other things that Star Path Academy talks about. And yes, they're a lot more important sometimes, I would say. But for example, this morning, we've had some economic data from the UK, GDP data, and for some reason now they're calculating the GDP on a month-on-month basis. I think this has come about since we had the lockdowns last year and the crisis. They used to come out every quarter, but now I think they're trying to manage perception and to make it look like things are picking up a lot. They don't want to compare it year on year, so they're looking at it every month, but they haven't even been able to make things look good with that kind of number, because investing.com says The May flash GDP figure for the UK showed growth of just 0.8% on the month. And I think this 0.8, I'm not sure if it's month on month or if it's an annualized number, but be as it may, it's a sharp slowdown, as they say here, from 2% growth seen in the previous month, a figure that was revised lower. Manufacturing output fell 0.1% in May, while industrial production rose 0.8%, both much weaker than had been expected. And with that, I just wanted to play you a clip of a politician who was on the Mike Graham show on talk radio earlier this week. His name is John Redwood. He's quite a important Tory MP. He's been member of governments before. He's been in the cabinet. I'm not sure he's in the cabinet now, but he's member of the COVID recovery group. So this is what he says.
Worried about the debt that we've found ourselves owing?
No, not, because I think we've got away with it. I think all the main advanced countries have done the same thing. They borrowed massive amounts to try and offset the huge damage the anti-pandemic measures have found to do to the economy. And they printed that through their central banks. And we've got away with it without a major inflation, which is why you don't normally do that kind of thing. And as long as we now go back to something more like normal, all will be well. And I think the budget deficit will come screeching down as soon as we have a full-blooded recovery. Right. Why is the deficit so big? Well, it's because we've been giving loads of subsidies on furlough and to businesses to keep them going. They won't need that because they'll be generating money from customers. And our tax revenues have been greatly depressed because the companies haven't been making the profits and the people haven't been earning the dividends and the extra income. That will all correct quite quickly if we go for this full-throated recovery. So the deficit comes down and we will have got away with the debt, which is owed to ourselves because the Bank of England bought up a great deal of it.
Well, there you go. A full throttle recovery, he said. So it doesn't seem to be happening, a full throttle recovery. I like the way he says everything's going to be fine. The deficit is going to come down. Yeah, the deficit will come down, but the debt is going to keep growing. That's what people... You see, these politicians, they try to make the deficit and the debt be the same. So, yes, the deficit is easier to bring down to balance than the debt. Well, the debt, we have over 100% of GDP in debt in the UK. That's going to be very hard to bring down. But the only way to bring down the national debt is to go into a surplus, something we haven't had, I would say, in probably 25 years, we haven't had a budget surplus. So the debt is going to start growing. And as you've seen here from the figures published today by the government, the recovery is not picking up at all. So the deficits are going to stay very large, in my opinion. John Redwood, I would say, is, he's looking at things on a pure Keynesian econometric fashion. Okay, we do this, we turn the thermostat up of stimulus. When everything picks up, we turn it, things will be okay. But he doesn't look at human action and how people will react, how people are scared, how small businesses have no confidence in the government's policies, whether they're going to be in business. He doesn't look at the fact that people don't want to come to the UK. The UK has a big tourist industry. London is heaving usually in the summer with foreign tourists going to the major attractions, Buckingham Palace, Madame Tussauds. They're going shopping at Harrods. That's not happening for 2 years. So this guy, I think, is just an example of MOPE, Management of Perception Economics. It's the politicians, it's the bankers, and I think he's going to be proven very wrong. We're going to have, we're already in a stagflation, and Star Path Academy rightfully says that we might not have a hyperinflation. It might never happen. But even if we prepare for it, it's not going to hurt us. All it's going to do, it's going to make us more self-reliant. So what about the deflation part of stagflation? Why do I think that's going to keep happening? Well, yesterday, the ECB announced that they're going to keep rates low for even longer. They're going to keep printing for even longer. And they said ECB changes inflation target, leaving extra room to keep rates low. First strategy review for nearly 2 decades. Amends key elements of monetary policy. So this is what the FT says. And you can bet all the other central banks are going to go along with it. They all play their game from the same rule book, the BIS rule book. The European Central Bank has set a new 2% inflation target and said it could tolerate temporary moves beyond that point in a shift that gives policymakers flexibility to keep interest rates at historic lows for longer. The change, announced on Thursday as part of the Frankfurt-based institution's first review of its strategy since 2003, marks an important break with the conservative monetary doctrine of Germany's Bundesbank that formed the bedrock of the euro's creation. Well, that's very significant. The German Bundesbank, which is the German central bank, has always been considered a bastion of sound money, believe it or not, for a central bank. And this is significant because the Germans were very skeptical about joining the euro or having a European central bank. And one of the conditions of having the ECB or the European Central Bank was that they would stick to very conservative monetary doctrine of the Bundesbank. And now it looks like they're going to abandon that. So I think that's significant. I think that's just going to make things even worse for the European economies, for the economies in the Eurozone, because the EU, of course, there are some countries that don't have the euro, but those that do, I think it's not going to improve anything. What about for those people who say that, for example, the Italian economy should have not joined the euro because it hasn't grown since 2000? That might be partly true, but I think the problem for Italy and a lot of the Western nations, aside from the central bank and their currencies, I agree to some extent, is the fact that the government is crowding out the private sector. How do they do that? Well, they're adding more and more debt to the system, more and more national debt, and the private sector has to finance that. And despite the fact that they have very low interest rates, it doesn't help because the private sector subconsciously knows that there's a tax on top of them. And yeah, I think that's the problem. Big government, big regulations. That's why the Italian economy hasn't grown. And taxation. Taxation is huge. And that discourages people from working hard. That also encourages the black economy in Italy, which is a big thing. So yes, this is significant. ECB going more the way of the Banque de France or the Bank of Italy prior to the formation of the euro. They're going to be more profligate. They're going to be more like a Banana Republic central bank, I would say. Not a bastion of sound money like the Bundesbank. And why is the Bundesbank, or why has it been historically a bastion of sound money? Well, because it was created in the early 50s after the disasters of World War II, where you also had a hyperinflation in Germany in the aftermath, but also you just had 30 years before the hyperinflation of Weimar. So the Germans were they're very conscious and aware of inflation and the problems that it can cause. So definitely stagflation, I would say. Hyperinflation, as I said, is a possibility. it's a lot bigger possibility today than it was 2 years ago. And wait for my interview with StarPath Academy. With that, then, let's look at where the markets are this morning. It's 8:30 a.m. London time. The stock markets yesterday, they were down about 1% prior to the U.S. opening, the futures, of course. And then they ended up the day down about 0.75%. So they recovered a little bit. Precious metals, not surprisingly, got hit down again towards the end of the day in Europe, middle of the day in the US. But yes, it's frustrating right now. But when you listen to my interview, hopefully, with StarPath Academy, you will see how wild things can get in hyperinflation, and how he says that prices like this that we look at today don't matter. You have to compare things against things. The currency, it goes into a wild, volatile environment that you lose track of the value of everything in that currency. But we're still far from there. And as I said, it's not certain that we'll get there. So right now, gold is at 1801.50, down just over $1. Range has been 1796 to 1808. Yesterday we got to a high of 1818, I think. Silver underperformed yesterday, got up to around 26.23 yesterday. Right now we're down 7 cents at 25.85. Range has been 26.07 to 25.75. The Dow futures up 38 points. NASDAQ is down 5. S&P future is up 2. Sterling is down 0.1% at 137.67. The euro is at 118.28, down 1/8 as well. Dollar is up 1/3% versus the yen at 110.04, and the dollar is unchanged versus the yuan at 6.49. To the Aussie dollar is at 74.33. That's unchanged. And the dollar is down slightly versus the loonie or Canadian dollar at 125.28. WTI crude is up 0.5% at 72.84. It has been as high as 73.03. So it looks like crude oil's picking up again after quite a big correction in the last few days. It looks like it's on its way back up, I would say. High-grade copper up 0.4% at $4.28. And the 10-year yield is actually picking back up. It's up 4 basis points overnight. So yesterday, I think we got down to 125. That's the other thing we need to keep an eye on as well as a very sharp drop. Volatility. So right now, yeah, up 4 basis points at 133. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.